Hello guys, thank you very much for joining me. This is Roy Machingura. Welcome back to your channel Pip Valley, where we give you weekly game plans for the Euro USD and the USD in the form of top-down technical analysis. It's looking at the monthly, weekly and the daily chart. As usual, we're going to start with the Euro USD pair. So without wasting much of your time, let's get straight into our analysis, starting with the weekly analysis. If you want to watch the monthly analysis, click on the link above where you'll be directed to the video where we did the monthly analysis. On this pair, as usual, we're going to be guided by the bullish trend, and also we said last week that the price, having made this first breakout, we're also anticipating the retest of this zone with the price moving to the upside. Then we can also notice that the price is forming a descending channel here. That being said, we'll be expecting three scenarios. We'll be expecting a false breakout where the price was going to continue the movements to the downside. Then we'll also be expecting the trend continuation in terms of the upside, and that trend continuation will also be backed by the breakout trade. As a general rule, if this zone is going to hold, then we'll be expecting the price to move to the upside. And if this zone doesn't hold as a support zone, we'll be expecting the price to move to the downside. Applying this channel now, we'll be saying that if this zone doesn't hold as a support zone, right, we'll be expecting the price to move to the downside within the channel. So it will be moving in this fashion until it breaks either to the downside or to the upside. So in this case, it will be a descending channel together with a false break. So the other scenario that we have is the use of the descending channel in conjunction with the bullish move and the bullish breakout facilitated by the horizontal zone. So what we'll be expecting under such a scenario is that the price will have to break this channel, which will also mean that this horizontal level would have held as a support zone, retest the levels of the channel, and then move to the upside. And given this one, we'll be expecting a huge move to be to the upside, since the channel will be involved. So we'll be expecting it to break above 1.23526, maybe retest it and move all the way to the upside. Then also looking at the price, it has formed this lower high after this lower low, also forming a lower low. Given this, we can expect the price to continue moving to the downside, also in support of our movement to the downside within the channel or in a false breakout. So these are the scenarios that we are looking at on the weekly chart. So now let's move on to the daily chart. On this pair, we still have the descending channel that we formed on the weekly chart, and the general price movement is to the upside, which means that we have a bullish trend that is forming. Unfortunately, we can't show the bullish trend because this is a fixed chart. Also, in the past couple of days, so from the 10th of March up to now, we can see that the price has been ranging between just below 1.19042 and 1.19850. So we can see the price has been ranging between this zone. So we can also expect the price to continue moving this sideways. We'll be just expecting the price to move maybe up to here. So it will be moving sideways until it breaks to the upside or breaks to the downside. So we'll start with the movement to the sideways. So if we want to trade the movement to the sideways, we're going to do it on the lower time frame for us to get a higher risk to reward ratio. It means that it will be high risk also. If the price forms a reversal pattern here, we'll hold a long position up to 1.19850, and if the price comes here, if it forms another reversal pattern, we are going to fade from here, hold it maybe up to 1.19042. So usually at times when the price is moving to the sideways, sometimes it may not reach up to here. Hence I said you have to put a lower risk to reward ratio so that you avoid being trapped, or you avoid cases where the price will just miss your take profit and then come and stop you out. So the bullish scenario, I'm going to use it in conjunction with this breakout also. So in this breakout, what we'll be expecting is that if the price now breaks outside, let's say it breaks above 1.19850, we'll be expecting it to pull back and form a lower high, and on the lower high we're going to get long, but up to this point, resistance level that is shown by the descending channel. Another scenario is once the price gets to here, we'll wait for it to break above the resistance level, retest it as a support zone, and now that's where we can take a higher reward to risk ratio trade, as we'll be expecting now the price to move to the upside, maybe break this zone, retest it, and continue movement to the upside. The second scenario of the movement to the upside is, since the price made first touch here, we'll be expecting that the price is going to come back again, make another touch here, forming a double bottom, and we'll be expecting to hold our long position up to this zone, and then later on, if it breaks, we'll add another position to the upside. There are also a couple of bearish scenarios. So the first scenario is that upon the price maybe coming to this level, so we're going to short this pair up to this area, so we'll be looking at a reversal within the descending channel. The second scenario is that we'll be trading here false breakout. We'll be waiting for the price to close maybe below 1.18233. so if the price closes below 1.18233, pulls back and forms a lower high, then we'll take short position to the downside. So these are the three bearish scenarios that we'll be expecting, the third one being within this range as we had discussed before. So these are the scenarios that we'll be expecting in the coming week. So thank you very much guys for joining me. It was a pleasure having you here. Thank you for your support and thank you for your views. That leaves me to say, risk your money well, grind the markets with grit. Roy Machingura out.